There are many different index funds in the market. How to pick the best ones? Index funds provide a relatively low-cost way to achieve investment diversification. They typically enable investors to track the return of a specific benchmark. That sounds easy, but there are many kinds of index funds. How should one decide which one to buy? Similar to other mutual funds, index funds can be evaluated based on the asset classes, geographical markets, asset quality, and levels of diversification they target. Investors can decide between different index funds based on his or her investment objectives and risk appetite. For instance, to diversify risks, the investor could consider those that track indexes whose underlying constituents spread across a wider array of industries or geographical markets. If one wishes to focus on a particular investment theme, he or she should pick the ones that track indexes with a more concentrated mandate. Take equity index. The Dow Jones Industrial Average and the S&P 500 have different characteristics, even though they both serve to represent the US stock market. The Dow is well known among all investors, but the S&P 500 are more frequently referenced by professional investors because its market coverage is larger. The Dow is made up of 30 constituents that are largely blue chips and industrial stocks. In contrast, the S&P 500 covers a wider range of industries and is therefore more diversified, comprising 500 stocks. Besides, they use different methods to calculate the weighting of their constituents. Dow Jones is price-weighted, meaning that the higher the share prices of a particular stock, the heavier it weighs in the index. S&P 500 is value-weighted, meaning that the larger the market capitalization of a stock, the heavier it weighs. Meanwhile, the Bloomberg Barclays Global Aggregate Bond Index and the FTSE World Government Bond Index are the two relatively well-known indexes that serve as the benchmarks of bond index funds. Both of them are tracked by over $2 trillion of assets under management, according to the International Monetary Fund. The Bloomberg Barclays Global Aggregate Bond Index focuses on investment-grade bonds, including treasuries, government-related bonds, and corporate bonds. As a result, its credit ratings are rather diversified. The FTSE World Government Bond Index focuses on sovereign bonds. The majority are of investment grade with relatively high credit quality. Investors need to compare different index funds carefully and make decisions based on his or her investment objectives and risk appetite.